Okay, we are live. How is everyone doing today? We are very happy and very honored to have with us Mr. Tom Luongo. Tom, I have all of your information where people can find you and follow you down below in the description box. But do you want to tell people where is the best place to obtain all your knowledge and information?
It's really almost all. It's not all in one place, unfortunately, at this point, because so much of it is behind the paywall over Patreon, and then a lot of the public stuff is over on the blog at tomluongo.me. You kind of have to be at both places. Now, eventually, we'll streamline all that, but as of right now, that's where it is. And unfortunately, it's like, oh, fine. I think 2023 is going to be the year that we finally, get professional about this. It'd be kind of fun. So we're working on
it. Okay, great. Let's get started because we have a lot of stuff to cover. It's been a busy couple of weeks.
Yeah, it's been a Leninist week, I would think.
Yeah. So
which years happened, right?
Yeah. So let's do a quick hello. Let's say a quick hello to everybody that is watching us on Rockfin, on Odyssey, on Rumble, on YouTube, and everyone in the chat room, the Duran.locals.com, and a hello to our awesome moderators, Peter, Valius, Reckless, Bad Bandit, and who else is moderating?
Oh,
I think that's everyone for now. William Justice, and William Justice is also there. Okay, great. Alexander, Tom, let's start talking about money, power, the Fed, the ECB, digital currency. Where should we begin, Alexander?
Well, I think that given that we have somebody here who actually understands these things, certainly better than I understand these things, I think the best thing to do would be to go straight forward to Tom and to ask him, I think, the question that everybody is asking me and which I cannot answer, which is how serious is this situation? Is it serious? And where is the weakness? Is it in the United States? Or is it in Europe? I'm going to take a guess. I'm going to say in Europe. I was watching
actually,
Christine Lagarde. Okay, but tell us a bit more.
Yeah, I think the best way to look at it, Alex, is that it's not that one is vulnerable and the other one isn't. It's the question of relative vulnerability, right? And then, because in the great game of global capital, I say this all the time, right, is that capital flows to where it's treated best. And you don't have to be good at treating capital well. You just have to be better than everybody else. And when you look at the US and you look at Europe and then you look at the rest of the world, and I'm now defining the rest of the world as kind of, and East and West is kind of the international North-South transport corridor. I think it's kind of the easiest way for people to understand this. Draw a line from St. Petersburg to Chabahar in the south of Iran. And then there's some bleed over because the Saudis are on one side but when you break it down like that, it's very clear that one side of the world is trying to get out of the old dollar hegemonic system. And that is putting pressure on the other side, which wants to extend it, but at the same time, on what terms, right? Now, so the question is, do we have grown-ups on the Western side of that divide who believe that, we've run this system as far as we can, time to back off, time to retrench, time to accede to reality? Or do we have another, and we have that group, I think, in the Federal Reserve and the New York money center banks, because they can see the problem. If they didn't see that problem, they would have backed staying at the zero bound, pumping up the shadow banking system to infinity and keep the party going. The other side of it is in what I call the Davos crowd in Europe, who absolutely want to unmoor money from all opportunity costs to create new monetary units, i.e. central bank digital currencies, script, for all intents and purposes, digital script that's programmable, that we can then create and contain the whole of economic activity under our control and under our technocratic rubric. That's the ideological divide in the West. Do we continue with commercial banking as the transmission for monetary policy, even though central banks are evil? Or, which is kind of the, from the libertarian perspective, kind of the poop sandwich everybody has to take a bite out of, is to realize that you got to either have a central bank that returns to a community banking model with the central bank at its core, or you can have the central banks run the whole Megillah. Once you identify that map, watching everybody's responses to that are really quite simple, and why they're responding the way they are. The pressure from the East and rapidly moving towards integrated trade with that's multi-currency, and with the announcement by Xi and Putin yesterday or the day before that the yuan is now, everybody's blessing the yuan as kind of the the currency that will liquefy cross-border trade ultimately in that space, and even in Africa. But at the same time, they're also building gold into the foundation as the means by which to keep everybody honest. Okay. So we're taking a page out of Sergei Glaziev, who I don't agree with completely about, but I do agree some. So once you understand that pressure, then you understand why Powell is acting the way he is, and why the New York Money Center banks have said, we don't have any other option but to back off and retrench. Because if we don't, they're going to tie everything to gold. They're going to sell our treasuries, and they're going to collapse our freaking banking system. And there's nothing we can do about it. They can survive a disorderly unwind. We cannot. Why? Because they have an energy surplus and a commodity surplus. And the gold is flowing from west to east. So in the big picture, that's what this is about. Okay. But at the same time, when you look at the three big areas of the world, who has the weakest hand? Well, it's Europe, clearly, because I was talking to my people, some of my financially savvy people last week, last week and the week before, during the whole Silicon Valley Bank debacle, right after the Fed came out with their quote unquote bailout package, which we'll get into. It's not a bailout. We said, look, at the end of the day, Europe is going to fire as many bullets as they can here, but like the Russians in Ukraine, the Fed can print more bullets, just like the Russians can actually fight industrial war because they have ammunition factories on site, right? And then they can bring that ammunition to the front. Well, the Fed can print more bullets in the form of US dollars and only allow them to circulate domestically, which would then shore up the American banking system relative to Europe. So now that we've established that as a background, as a foundation of what's going on here, it's nothing I'm going to say today, and I have been saying, is predicated on the idea that the U.S. is going to come out clean, Europe is going to get trashed, and everything. No, it's all a big poop sandwich. We all have to take a bite, and the question is, who's going to take the biggest bite? Now, let's talk about Credit Suisse, because this is the most misunderstood portion of the entire thing. Let's go over what happened. So I wrote a big blog post on Monday and as I was writing that blog post, that's when I had all the insights in the second half of the article. I would say, understand that sometimes I do this literally on the fly. So I was intending just to write a missive about why FDIC in the United States is a weapon that the U.S. can deploy in such a way that it can it will put pressure on Europe, because Europe doesn't have FDIC in the same way that the United States does, in the same way that Europe doesn't have a singular bond market, correct? Which is why the euro is a fundamentally weaker currency than the dollar. In the same way, you don't have deposit insurance for your banking system under one monolithic rubric like the FDIC for the entire US banking system. Okay. In Europe, you have individual countries have some, and they have what they have. Some have 100,000 euros or whatever they have, but understand that there can be no integrated policy response to a depositor bank run in Europe. Okay, period. So if Europe runs into the same interest rate differential problems that the U.S. that Silicon Valley Bank ran into, and other regional banks in the U.S. are going to run into, and other banks in Europe are going to run into, understand that the U.S.'s implicit guarantee of insurable deposits, not all deposits, just the ones that already qualify for FDIC insurance, are going to be unlimited are going to be backstopped to infinity. And by the terms of the Bank Term Funding Program, the FDIC, if it runs out of money, will tax the big banks to cover the shortfall. So for once, we have the exact opposite of what happens in a U.S. banking crisis, which is the regional banks go broke, which is that the big banks take outsized bets, they get in trouble, and then they cannibalize the regional banks, sucking up all their good assets onto their balance sheets, destroying the regional banks, and then dumping the bad assets onto the public balance sheet, which is what they've always done in the past. They did it in the 30s, they did it in 2008, but they're not doing it this time. This time is different. And it's important that we go through the mechanics of this, because that's going to tell us what's actually happening. So we have the exact opposite happening. We have the big banks pledging capital and pledging future earnings to backstop the FDIC to make sure that payrolls are met in the United States at small and medium enterprises. Okay? Because those are the ones who are most vulnerable to the $250,000 FDIC limit. Because, you know, you run a company with 40 or 50 people in it, you've got more than $250,000 in the bank to make payroll, because your payroll is probably more than $250,000, right? I mean, so this is a very important thing, and you don't want them necessarily banking at JP Morgan. As a matter of fact, JP Morgan doesn't want that business. They've explicitly said they don't want that business, which is why they're dumping money into First Republic Bank, for example, okay, to signal to the markets that they don't want the regional banking business. They want the big business. They want to play at the global level. They want to, underwrite. They want to be the book runner on new pipelines and, and new nuclear power plants and that stuff. They don't want, as I put it the other day, they don't want to build a library in Palatka, guys. They just don't want that business. Okay. And, and we need to get back to a community banking model in the United States. And the only way we're going to do that is to unwind all of the onshore shadow banks that we had here in the United States. Silicon Valley Bank being the biggest. Ally Financial is the next one. Okay. BlackRock is the biggest one in the world. Okay. So, and they're not even a bank, but they might as well be, because they act like one. So when you think about Credit Suisse and why the Credit Suisse merger with UBS was so interesting, and why the Europeans are screaming so hard, and you'll note they were all screaming. And the only thing Zero Hedge got right on Monday morning was noting that the ECB, the European Commission, the European financial commissions, and all that were not consulted at all by the Swiss National Bank, UBS, Credit Suisse, or the Federal Reserve, who was involved in the negotiations. They were cut out completely. So now let's talk about the CoCo bonds, which are the AT1 bonds, which were the big sticking point. Okay. And the easiest way to explain this is in terms of poison pills. Okay. One of the classic poison pill defense strategy is to basically issue a bunch of shares, right? And then force the hostile takeover to buy all those extra shares. It doesn't really work, because it's always a bluff. This is what they tried to do to Elon Musk when he tried to buy Twitter. He waited out the poison pill strategy. He made it work. It's, and you can look this up. This is, you should, for people who are interested in this, they should really do a little bit of due diligence on this. Investopedia's got great articles on this. So do other sources. There's been reams written about how to attack and defend against a hostile takeover through the equity markets. But what was going on with these conditionally convertible AT1 bonds, which are, by the way, AT stands for additional tier 1 capital, meaning this is the fundamental capital necessary for the banks to maintain their capital adequacy ratios under Basel III. Otherwise, they have to be shut down, or they have to be, if they don't have tier 1 capital, then they run in afoul of banking regulations across the European Union, across just period, across whatever their regulatory framework is. Anybody who adheres to the Basel III standard, the US, Switzerland, the EU, well, guess what? You run into capital adequacy ratio problems. All of a sudden, now the regulators are stepping in to manage the bank and telling you have to do X, Y, and Z. So the AT1 conditionally convertible market is a $275 billion market. Well, was $275 billion. I'm going to be smug about it and go, now it's only $258 billion, because $17 billion of them were written to zero by Credit Suisse and UBS during the merger. These are effectively perpetual convertible bonds. They have no term on them. They're just pledged capital and they pull a term. They pull a coupon in perpetuity as pledged Tier 1 capital to the bank that issue it. Traditionally, in a bank failure, the bondholder, in any company failure, the bondholders are all paid out first because and the shareholders are subordinate to the bondholders, and the depositors in a bank are subordinate even to the shareholders. So, because this is English banking law going back 500 years, that depositors in a bank are the unsecured creditors of the bank. If you have any expectation of yield off of your passive deposits in a bank, you have to consider yourself an investor in the bank. You've taken your money, you've deposited it in the bank in order for the bank to go out and make money with it, and then you both share in the profits. And if the bank makes a mistake and goes under, well, and that makes sense. And the shareholders would then be next, and then the bondholders are always are almost always superior to that. Well, that was what everybody thought about these CoCo bonds in that Credit Suisse and UBS have offered. And apparently, and I didn't read it directly, but it's in there, and I saw a reference to it. Daniel DiMartino Booth and others made reference to this, and I didn't have a chance to read the full text. But they had covenants within their CoCo bonds to write them down to zero under certain circumstances. But here's the thing, and I want you to explain why they did it. As of Friday's close, as during all this banking turmoil, all the banks' market caps had dropped by what, 25, 30, 40%. So UBS went from being an $85 or $90 billion market cap to a $56 billion market cap. Well, if Credit Suisse has $17 billion worth of these CoCo bonds, if for UBS to buy Credit Suisse, it's like a reverse poison pill. They've got to buy $17 billion worth of these. They first have to convert them to equity and then buy that. And in order to do that, they have to issue enough shares to cover the $17 billion. Well, that makes the bondholders of the holders of these CoCo bonds now at what, 25, 30% ownership stake in UBS? Oh, because they now own Credit Suisse, and then you got to buy, and then UBS has to buy this monstrosity. And even if they buy it for $1, it doesn't matter. The amount of number of shares that you have to dilute out UBS in order to buy this thing is what matters now. So this is why the Europeans are pissed off. They really thought they had credits. They really thought they had the Swiss National Bank as a player at the table, ring fenced. Like they were ready to take them out and execute the Swiss National Bank, because both UBS and Credit Suisse together form the backbone of the Swiss National Bank's ability to do monetary policy through the commercial banking system in Switzerland. The two biggest banks in Switzerland. You take out Credit Suisse, you severely impaired the Swiss National Bank's ability to conduct monetary policy. You take out UBS at the same time, same thing. So if you're Davos, who already kneecapped and destroyed the British banking system last summer and have been targeting Credit Suisse for 8 months now in order to take Credit Suisse out, and you want control over the Swiss banking system, then you take out Credit Suisse. This is just move, counter move. This is just chess, folks. This isn't like high concept shit. This is really, really simple. I want to pressure the queen. Well, I want to pressure the queen, which is the Fed. How do I do that? I pressure the rook, who's the SMB. I take them off the board. How do I do that? I bind them down. Okay, I'm not even like going with my 7-player game of Go metaphor. This is just basic, freaking everyday power politics. Okay, you take out the SNB, or you take out the Swiss Credit Suisse, you can now freeze the Swiss banking system. And who owns $140 billion worth of high liquidity blue chip stocks? Equities. The Swiss National Bank. They're the biggest equity hedge fund in the world. If you want to destroy liquidity in the Dow Jones Industrials, then you take out the SNB. If you want to ensure that there are no escape hatches from the European sovereign debt crisis that's being engendered by Powell's high interest rate policy, then you neuter the SNB. Because European investors would then start pulling their money out of the DAX and start looking for the Dow to park their money in. And where are they going to get that in Europe? Well, the S&P's got $140 billion worth of this. It's just a massive liquidity pool on the European continent. Okay? So this to me seems like the incentive map of what's happened here. And by resisting the reverse poison pill, I guess is the best way to put it, of writing down these cocoa bonds to zero, they protected both the Swiss National Bank, UBS, and Credit Suisse. And this is why everybody's screaming about how this was illegal, and now Lagarde's saying that Switzerland's a third world country and all the rest of it, but they can't do anything about it. The Swiss are like, that's fine, sue us. By the time we get done with court, it'll be 10 years from now, and you people won't even be in power anymore.
So this is ultimately about the crisis, the festering crisis within the European bond system. Somebody was sovereign bond system that they're trying to plug. They were trying to plug, or rather, they were trying to plug a potential hole through which things could leak out if the bond system
started
explodes.
To collapse. And it is collapsing. And there's other facets to this, guys. I was been thinking about this, and I really haven't even had a chance to write about it very much. I've talked about it in some interviews, and I've chatted with my patrons about it. I haven't even brought in the Bank of Japan yet. Like, this gets really interesting because all this happened in the same week that the Bank of Japan's changing leadership. Okay, but we'll get there in a second. But the big thing here is that as Powell raises interest rates, and you'll notice that yesterday he raised by another quarter point, and he had to. There's no option for him but to not raise by a quarter point. Otherwise, everything I've been saying about Jerome Powell, I would have to take back because he's Janet Yellen 2.0. But actually what happened was Janet Yellen, while Powell was speaking, made a contradictory statement to undermine the Fed. That's the clearest example yet that Yellen and Powell don't work for the same team. I mean, if you can't see that at this point, I'm sorry. I'm not listening to you on Twitter anymore. I will block you, or I will just mute you because you're a moron and you refuse to accept reality. And I'm getting to the point of wanting to mute Zero Hedge on this because they're not getting it. They're not seeing the situation for what it is, that there's a very clear split between the Federal Reserve and certain banks in New York and the Treasury Department and the Biden administration. And the more I study the past behavior of Bernanke and Yellen and Greenspan and everybody else, it's very clear to me that there was always been an ideological divide within the Fed that existed during the Bernanke-Yellen years that has now blown up into a complete and utter financial war, ideological war over the future of U.S. fiscal, monetary, and banking policy. And Powell's always been on one side with Richard Fisher and Daniel DiMartino Booth, and Bernanke, Yellen, and the rest of them have always sided with Obama and Geithner and the rest of them. And this is very, very clear. And when I had Danielle on my podcast a few weeks ago, she wasn't willing to ultimately, say anything about Yellen other than that and Bernanke, other than they were shockingly naive about how their zero-bound interest rate and QE policy could be manipulated. Okay, that's fine. And she may be right about that. I may be ascribing more motive to this. And I'm not here to say I'm right and everybody else is wrong. What I'm here to do is to present information and get it into people's heads and start thinking through, and then go look for information, go look for confirmatory or despair, and have a conversation about this, because this is a very important conversation. There isn't a more important conversation in the world right now than between that and whether or not the Brits are going to try and induce the Russians into nuking somebody by throwing depleted uranium. They're giving Ukraine depleted uranium shells, which is insane, right? I mean, these are your two big conversations. Everything else, in effect, doesn't really matter. But I know, FYI, that the calm emanating from Moscow, Beijing, and other places, and even India, and even Mumbai, tells me that they're not worried about what's happening in Ukraine. And so I can now, from that perspective, I'm now focusing on the banking fight, the situation in the financial markets and the fight for the control of the West, because Davos thinks that Davos knows that they need both political and monetary control in order to win. They don't have control over the monetary system in the United States. They have political and monetary control in Europe. They now have political and monetary control in the UK and Canada and Australia. but they don't have it in the United States. And without that, they can't win because the United States is bigger than all of those combined. This is why this is so important.
But by orders of magnitude bigger. Now, can I? No, I would definitely. I mean, no question at all, I would say. So, in effect, what we're seeing is a power play. I mean, what we've been seeing over the last few weeks is essentially a power play between the Europeans. We call them the Europeans and the Fed.
I like the old. The old colonialist European powers. Is the old colonialist European elites, not European, not rank and file Europeans.
Absolutely. With importantly though, the Treasury Department and the administration more on the side of the Europeans, as opposed to the Fed, which is working together with the New York banks and the American financial community.
Yes.
But of course, it's a power play which affects every single one of us. We don't quite know where all this is going, and we're all worried about what's going to happen. And people are worried. I mean, I've been getting messages. What does this do for me? I mean, is my money safe? Is my money safe in America? Is it safe in Europe?
It's a good question, and I will say this. As bad as the interest rate shock that Powell has pushed onto the world but is necessary in the same way that what Volcker did in the early 1980s was necessary. Now the numbers today are startling. The numbers in commercial real estate in the United States are horrific. Again, there's going to be a lot more regional bank failures in the United States. We're not done with this. Okay, this is just the first in a series of things that are going to pop off. And yes, the financial crisis that's coming is going to be far worse than what we saw in 2008. But it's going to be of a fundamentally different character. And now the question is, well, let me put it to you this way. Whose bonds do you think are more overvalued? Germany's at minus 1.2% versus the Americans at, relative to inflation and control over the banking system and or the US's. Now, clearly, the market has spoken over the last couple of weeks. The first, at the first sign of trouble, everybody rushed into U.S. Treasuries. Now, it allowed, underneath that, Christine Lagarde at the ECB to help maintain credit spreads between U.S. and European bond markets. Through currency arbitrage in the euro and selling treasury and all that stuff. And in the turmoil, she could play that game. But once things start to calm down, and as they are right now, you're seeing a tightening of those credit spreads. I've been saying this for over 2 years. Watch the German U.S. credit spreads, because this is your benchmark. And certainly if you watch the 10-year, which is the benchmark rate for both economies, that for the European Union, the German Bund is the safe haven trade. In the United States, it's the U.S. 10-year, right? So if you watch those and you watch that spread in yields, you can tell who's losing confidence in whom. And since the German 10-year has been trading at far lower yield than the U.S. 10-year has been trading for years, that means that everybody believed that the German 10-year was better. So, and as that spread tightens, it's losing confidence in Germany. Eventually, it's going to flip in reverse. And it'll start to look like Italy versus the U.S., which is Italy's debt. And Italy's debt only trades at 1% or 0.5% at 10 years over the American debt. That's just fiction. I mean, who in their right mind trades this stuff unless they're getting money, unless they're being able to create in the shadow banking system, carry trades and interest rate swap trades that allow them to continue to play to in that virtuous cycle. Right. And in order to maintain that now let's bring in Japan. And Japan has been the one that's been liquefying these trades by keeping yield curve control on the long end of their yield curve. By doing that, they set up a short yen carry trade at the long duration, and they can short Japanese government bonds, knowing full well that the Bank of Japan has their back. If it moves, they'll just buy them and support the yield and keep it stable. And then they can go buy, higher yielding long duration somewhere else. And in the case of the American markets, they can go and buy short term and get an even better yield. So they can short Japanese 10 years and buy American 2 years and pocket 4.5% as of 3 weeks ago. like it's crazy, right? But you saw it in if they were just playing the duration game, they could get 3%, 4%, 3.5%. And then for weeks, I kept saying, why won't somebody allow the U.S. 10-year to get above 4%? What's going on here? Who's sitting on this? Who's sitting on this? Whose ox gets gored at a Japanese U.S. spread of above 3.5%? Somebody's did, clearly. And eventually it broke. Now, we have a change over at the Bank of Japan. And this is where we get into like me schizo posting or projecting. As my partner Dexter White calls it schizo posting. I call it speculating. 6 of one, half dozen of the other. Kuroda just stepped down after years at the BOJ, an architect of the yield curve control and QE and the kind of the apotheosis of QE in Japan, of the 30 years of QE in Japan. Japan was the linchpin to the coordinated central bank policy of the last 15 years, where we do round robin QE and everybody keeps the interest rates at the zero bound, and are all able to do so because of Japan and the United States keeping rates at zero, turning the US dollar into the ultimate carry currency in the world, which is mind-boggling that they would even do this. And it beggars belief that Bernanke and Yellen, as smart as they're supposed to be, could not see this. This is why I can't believe them to be shockingly naive in Danielle Booth's. I see malice. I can't help myself. Right? They knew what they were doing. They were destroying commercial banking. They were putting all the money into the zero bound rate casino and levering up the world in order to create the insane world we live in today, in the purpose of building up a massive dollar bubble and then allowing it to crash on their terms and then affect the Great Reset in short order. And Japan was always an important linchpin in that. But it's the five major central banks, the ECB, the Fed, the SNB, the BOJ, and the Bank of England, all coordinated monetary policy for nearly 15 years, or really for 13 years. The SNB was the first one to get off the wagon when they depegged the euro, the Swiss franc to the euro, a few years ago. Then it was the Bank of England started raising rates before Powell did. Powell would have started raising rates earlier, but he was under political pressure from Biden, who wanted to replace him with Lael Brainerd to keep him at the zero bound, because everybody knew what he was going to do the minute he got reconfirmed as Fed chair. Again, going back to the 15 years that Powell's been a member of the FOMC, everybody knows what he thinks. He's written policy papers on this. You can go back and read them all. Okay, you can read his dissents in the FOMC minutes, right? It's all right there. Him and Yellen going at it tooth and nail for years. And then you had the Bank of Japan doing yield curve control and keeping them at the zero bound. So so you first had the SNB leave, then you had the BOE, then the Fed, and then the ECB kicking and screaming started raising rates about 6 months later. And the only one left is the Bank of Japan. And they finally, in December, widened the band on yield curve control from a quarter point to 50 basis points. And during all of this craziness, right after the Fed and the Treasury put their system there, announced the Bank Term Funding Program, the Japanese 10-year dropped dramatically in yield, meaning people were buying the Japanese 10-year back in the open market, meaning they were unwinding those short yen carry trades I just described. And it hasn't gone back yet. And the fascinating part about this is that Kuroda was supposed to be succeeded by his right-hand man, Amamiya. And Amamiya turned it down. And I read a really great interview with him as to why he turned it down. He fell on his sword for Japan. And he said, look, central banking is changing. We no longer have academics in charge. I'm an academic, Kuroda, Yellen, Bernanke. That era of central banking is over. For the good of Japan, I was the architect of this current monetary policy. And at this critical time for Japan, I may not be objective enough to be able to shift policy. That's a very Japanese way of saying I was given the talk and we're changing policy. But I can't say that. I will fall on my sword. Because for him to turn down such an honor in a culture that reveres superior, their elders and superiority in that respect, right? For him to turn that down is massive signal. So Ueda, who's now in charge of the Bank of Japan, I expect in the next couple of months will admit that inflation's out of control and that yield curve control is going to have to end. And that is what's going to light the firestorm. That's going to be the catalyst for the end of the European sovereign bond market. And the Fed is going to continue raising rates. It's going to continue shrinking its balance sheet. It's going to continue to drain the world of offshore dollars. To the commenter who just gave the super chat in that says Bitcoin fixes this. Yeah, in about 20 years. What are you going to do between now and then? I saw the comment because I've been fighting with the Bitcoin maxis about this on Twitter for weeks now, and they don't get it. And I need you guys to get it through your heads. It's not that Bitcoin doesn't fix this. It's not any of that. It's that Bitcoin is not ready to do this yet, but it's going to be one of the assets, one of the bearer assets that will help stabilize and liquefy the U.S. banking system on the backside of this. But right now, this is a fight between titans. I've been saying this forever, and I'm even half convinced that Bitcoin's being used to help collateralize SOFR repo trades at this point. But that's honestly kind of speculation and a little bit of forensic stuff that's way off the beaten path. What we're seeing now is a really important moment in time where if this is correct, the next counter move by Davos is going to be apocalyptic. That's the problem. It's like you're everybody's like doing the move counter move. Now, what's their next escalation? Just like every time Russia wins a little bit in Ukraine, there's a massive escalation from NATO, right? It's the same strategy because it's the same people, personnel.
Very true.
Right.
Very true. It's exactly the same people. Can I just ask that? So Japan essentially, is from what I understand it, is switching sides. I mean, they were going. If I've understood this correctly,
I think so. And I used to believe that the Bank of Japan was always the Fed's wingman, and I was thinking about it from the dollar perspective. I was wrong about that. It was very clear that Kuroda was helping Lagarde maintain credit spreads for the last while Powell went through the bulk of his interest rate hikes, and now that Kuroda has been forced out in Japan, now that there's been political turmoil at the top of Japan. Remember, Shinzo Abe was assassinated in public. Like, there's a lot. Japan's very, very important here. And moreover, that the Japanese refuse to go along with Western energy sanctions. Right? Japan has to start charting a more independent path. And so, ultimately, like, the secondary players like Japan, I hate to say them, like England and others, Canada, a lot of people, remember in politics and all of these things, these are all prisoner dilemmas you're dealing with at this point, right? Everybody's all on board with, state and the party line. This is what's happening until someone else turns. And then they start cutting deals, and they start cutting deals, and they start cutting deals, and they start cutting deals. And guys, what the three of us have been doing geopolitically for the last 10 years have been to identify those moments geopolitically where the prisoner's dilemmas and geopolitics have broken down, which is, it's why I love you guys, because but that's in effect, that's what we've been doing, right? Now let's apply that same analytic framework to the capital markets and what it means for the capital markets. So the capital markets are actually the target here. That's the prize. And so that's why I've always kind of, I hate to say this. I do this all the time. I'm giving interviews. And I tell people, I LARP as a bond guy. I don't want to do this. I never, in a million years, if anybody ever asked me whether I'd be sitting here talking about U.S. German bond spreads, I would say, no, get out of here. Like, no, I'd rather talk about Bitcoin. I'd rather talk about my board game night from Wednesday night than talk about credit spreads. But now I have to be that guy, because that's where the story is. That's where the fulcrum.
Absolutely, because what seems to be happening is that we have the greater story, which is of the bifurcation of the global system. In other words, we have another alternative to it, and we have to different responses. We have the response that the Federal Reserve Board, the New York financial community, the commercial banking sector in the United States, the big commercial banking sector is taking. They want to stable. Am I stopping? I'm getting this right, Ness?
Yeah.
They
want to stay in power.
They want to stay in power. They want to consolidate the system. They want a working system. They want a functioning financial system, which is one that is to some extent rooted in to a great extent rooted in the real world, because which means in effect a return to more what I would call more conventional, if you like, financial management. And then you have the other side, which is the Europeans, who have a completely different conception. Now, again, we stress that when we talk about the Europeans, we're talking about a completely different. We're not talking about the European public. We're talking about the European elites we've talked about so often. And you're absolutely right. It's exactly the same people that are pushing the Ukraine war, who are running these things.
They're exactly the same people. Yeah.
They have created a completely synthetic monetary structure in Europe that can only function effectively to the extent that it is made global, because you can't really run a system like this unless the United States and Japan play along. The United States, because as we've just discussed, they want a more conventional, they want to return to a more, shall we say, conventional fact-based system.
They want
political system.
It's really important. The community banking model is what built the United States into what it is.
Exactly.
Okay, and it's been a slow degradation. And look, don't get me wrong. Like my libertarian friends, the Ron Paul types, again the Fed types, they're not wrong that the Federal Reserve as an institution is nothing but a nest of moral hazard, and at worst, and at best, a massive information problem writ large. In the Hayekian sense, right? The information problem, which is that they just don't have enough information to be able to centrally plan anything. This is the fundamental problem with all central planning, right? Is the information problem. And Davos believes that they can just use AI to overcome and technology to overcome the information problem. And I keep shaking my head going, you are the same people who kept saying this 300, 400, 1,000 years ago. It's nothing new. Speed is not what's important here. AI is not going to save you. Is not going to create a predictable future. It's not. What's going to create a predictable future is putting the wisdom of the collective wisdom of humanity in the hands of the individuals who make up humanity. Yeah. Right. But that's a philosophical point that we can get off on. And I think that the ideological divide here is really just between the idea of, are we going to have private formation of capital through the commercial banking system and the application of risk through through somewhat market interest rates, not full market interest rates, but somewhat market interest rates. And I could even make an argument that SOFR, the secured overnight funding rate, is a platform with which to create actually regional interest rate demand in the United States again, like we haven't seen since before FDR collapsed the 12 regional interest rates into one under the New York, basically under the auspice of the New York Fed. I can make that argument. We want that. Davos wants centralized control of everything. The thing that's really dangerous about those cocoa bonds is that they were the validation of George Soros' strategy to default on the debt, the sovereign debt of all the countries, and issue perpetual bonds in order to bring about the digital euro. Yeah. That concept has now been destroyed because the minute the Credit Suisse, this was the thing that had me like, I was literally shaking. I had to stop writing Monday morning when I finally came to this conclusion. I was running around the house shaking, going, "Holy Jesus Christ! This is what they just blew it all up." Because by impairing those things, and by the way, they all dropped, all the other ones like Deutsche Banks and INGs and everybody else, they all dropped by 10, 12% on Monday morning. And no one's talking about where they are today. I wonder why, because they never talk about what's happening today when it's bad for them. Like, maybe the market's recovered, maybe it hasn't. but that all those banks are their tier one capital is now impaired if the market distrusts them. So now how are you going to bankrupt the German, shoe repair guy in Dusseldorf? How are you going to bankrupt him by freezing him out of the banking system if no one will buy into swapping German Bunds for ECB perpetual bonds? Because the first tranche of perpetual bonds you put out there were impairable, right? And I just think that the mechanism of the hostile takeover through convertible bonds, that was the mechanism by which they were going to take over the entire European banking system. Okay. And then then they owned the commercial banks. And then when the ECB turned around and then you see, this is the really, really pernicious part. Think this one through, guys. I really want you to think this through. So if I'm Emperor Palpatine, I'm George Soros. If I'm Emperor Palpatine, right? If I want to destroy the German middle class and have them so desperate and gasping for air, you ain't seen nothing yet, folks. What's coming for you is the following. It's exactly what they had planned for Credit Suisse. There's $258 billion worth of commercial of these cocoa bonds that are out there. During a banking crisis where rates start to blow out in Europe and sovereign bond rates start to blow out in Europe and credit spreads collapse because this is their way of saying, okay, well, if the Fed's going to raise interest rates and the BOJ is going to end yield curve control and we're going to deal with, German Bund, 10-year German Bunds at 9%. Well, we can't do that. That's the whole banking system is going to collapse. Great. Okay, fine. What's our counter move to that? Because if I can see it, they can see it. Right? So what's their counter move? Well, their counter move is that the bank stocks will all drop like a rock, 50, 60, 70, 80%. The cocoa bonds relative to the market caps of the banks explodes as a percentage of the market cap of the bank because it's a fixed number. If the market cap drops, right? Just like I described with UBS, say you have Deutsche Bank at $100 billion with $20 billion worth of cocoa bonds. It's now that's 20% of their market cap. Well, if Deutsche Bank drops to 20 billion, it's now 100% of their market cap, or 85% or whatever it is, 85% of their market cap, right? So the holders of those bonds become the owners of Deutsche Bank. So if I were Emperor Palpatine, I'd own all those cocoa bonds, crash the banking system, and then I would own them. And then worse, individually, because the ECB is not on the hook for depositor insurance, the central banks of all the individual countries are, the Bundesbank, the Bank of Italy, blah, 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 blah. They're the ones who are going to have to pay out depositors. Well, EU budget rules preclude that from happening if you're already running a 3% deficit. Guess what? The ECB can now take over your budgeting process, a la Greece. What they did to Greece in 2015 is what they're going to do to Germany when they crash the banking system in Germany. But they're going to do it, all of them, all at the same time. And the people who created the crisis and want to institute the big reset are the ones who just bought through convertibility all the commercial banks, so that when the ECB says, well, yeah, and then the governments will be forced to not bail out the depositors, and everybody will be so desperate that when the ECB says, okay, we're going to cancel all the sovereign debt, and the commercial banks are going to go along with it, and they're going to roll it all up to the ECB and issue digital euros and perpetual debt. Mm-hmm. And that's what they're going to stuff what's left of the commercial bankings, and they're going to stuff those bonds into the central banks of the individual countries, collapsing the commercial banking industry completely, rolling them up into the individual central banks. They'll be the new commercial banks of all of the Eurozone, and the ECB will be in charge of everything.
They control the central banks.
If I were Emperor Palpatine, that's exactly what I would do.
Yeah, it's still an apocalyptic vision. I mean, I have to say, the idea in Germany, for example, of people seeing, the banking system there implode, and having to sort of go to the Bundesbank to take the role of Volksbank and all those
I just don't see it. But that's what they.
Well, I have to say. I have to say, if you wanted to devise a mechanism for provoking a revolution in Germany, then this is the way to do it. But I mean, that's
No,
if that's the
I
plan.
agree, Alex. I
If that is
agree.
the plan, but yeah,
But to me, I could see. But this
yeah,
to me, this
yes,
looks like the plan because
yeah,
it's
yeah.
no different than what Soros has been saying. He's been saying
Mm,
this in
mm,
openly in speeches, in
mm,
articles over and over and over
yeah,
again, saying this is what we need to do. It'll be the best thing for everybody. No, it'll be the
yeah.
best thing for you, George.
But in the meantime, as this battle between the titans is playing out,
Mhm.
parts of the banking system have been caught in the crossfire. I mean, that's
Yeah,
basically
no house.
what you're saying. I mean,
Yeah,
which is
yeah, and,
yeah,
and I think the United States is in a fiscal and liquidity position strong enough to be able to handle it. Now, is it going
mm,
to be ugly? Is unemployment going to rise? Or are people going to be put out of work? Or pensions
mm,
going to be defaulted on? Yeah. Is it going to be ugly? Yeah.
mm,
But you can't undo 15 years of a fake economy run by fake
yes.
humans in a fake version of Disney World, to paraphrase Philip K. Dick, until you clear out the fake valuations and all the fake
Es-
money.
I
Go ahead,
mean,
Alex.
especially given that a fake economy, a synthetic economy, is
Yeah,
unsustainable in the first place. So
exactly.
I mean, yeah, I mean, it's sooner or later, it's not going to be sustainable anyway. So it might be that you're going to go through a very turbulent time.
That's a very
But
good question from Melina, by the way.
yeah,
Um,
okay. Well,
the
shall we
non-euro
do
countries,
unemployment?
by the way, Elena, are going to do very well in this, because they're going to be sources of they're going to be sources by which people can run to. They're going to be able to run into the Hungarian forint, or the Polish zloty, or whatever. This is important. I think the Danes are not the Danes, the Dutch on the euro. The Dutch are on the euro. There's a
Oh,
couple
the Dutch,
couple of
absolutely.
a couple of countries, yes, but a lot of the money is just going to run into the U.S.
I think
But
Sweden
Sweden
doesn't
is
use the
still on,
euro.
and
Yeah,
so is
yeah,
so is
yeah,
Scandinavia. I think,
yeah,
the Norwegians are clearly on their own currency. So are, I think, all three of
yeah,
the countries are. They're
mm,
in the eurozone, but they're within the European Union, but not in the eurozone. So
mm,
understand that um, it's going to do tremendous. It's going to put tremendous pressure on the EU. I personally think that the European Union can't survive this in its current form. I
mm,
don't think it's possible. And I honestly, I've described a lot of these things as like a race, right? So it's a race in the war of attrition in Ukraine between whether or not the West will run out of ammunition and political will to continue to prosecute a proxy war against the Russians, or
mm,
will the Russians, economically and culturally and militarily collapse. That was y'all know where we stand on this. We always
yeah,
thought Russia could win the war of attrition, because that was the war that they
mm,
chose to fight
yeah,
when the war was put on them. That was that
yeah,
race. That then puts the onus back on the financial system, and now it becomes a race between whether or not the Fed can break up the European Union before the European Union can break up the United States.
yeah. It's another war of attrition.
Yes, it is
And
absolutely a war of attrition.
we go back to your point before, which is that the United States, the Federal Reserve, can always ultimately outproduce the ECB and all the rest. So it's
Thank you, Alex.
effectively it's the
I
same.
was just about. I was going to say, and yes, the Fed
We're
can print
saying
all
the
the
same
bullets.
thing. They print all the
That's the way
bullets.
I see it.
So
And
so
it's not that
yeah,
these people are good in any way, manner, shape, or form. It's not. But I can
no,
also tell you
no,
that let's now really think about this. The Fed is setting up in the long run. Yes, there's going to be weakness in the regional banks. Yes, there's going to be commercial real estate bankruptcies, and there's going to be a lot of problems.
mm,
Don't get me wrong. And maybe they should stop before they get to my terminal rate of 6 or 7%. I don't know. I pull these numbers out of my head in order to shock people,
mm,
and it's by me reading the tea leaves of how people on the other, who I have identified as the Fed's enemies, how they're reacting. So they have not reacted very hard
mm,
to 4.75%. So fine, let's go to 7. Let's see if they start sweating then. I mean, it's literally that. But interest rates at this point aren't the big deal. Actually, raising to 6 or 7% would actually help, because of the virtuous cycle now for the onshoring of U.S. debt. and have it and bring it back into the United States to shore up the capital and start recapitalizing the United States by, hey, we're offering 7% on 2-year money. Okay, like put your money here, pension funds. You've just gotten a massive. You've just finally started to, refill the holes in your balance sheets. And because so many pension funds are looking for 8% yield, they no longer have to go to BlackRock and a CLO and a collateralized loan obligation that's been levered up to the tits, in order to get 8%. They don't have to take that risk on anymore. Now you can buy treasuries, get yield, right? And if you're really smart, you do what Ted Oakley told me to do in the podcast I did with him, which is just open up a Treasury Direct account and go buy variable rate U.S. Treasuries and ride it all the way up to the top, and then sell them and buy fixed income and buy fixed rates at the top. It's not tough, right? And then wait it out and figure out where the money's going to go, where the money's going to flow into. And these are just basic strategies of how to deal with the interest rate risk. But this money is all coming into the United States, and that's going to mitigate some of the problems. And we haven't seen that money flow into the US yet because of the counter moves that Davos keeps making to try and freeze capital in Europe and not let it leave. And that's why we have the things like, oh, they're going to arrest Donald Trump. Oh, they're going to do this. Oh, they keep putting on the clown show. Keep promoting the clown show. Have Lizzie Slap-a-Ho Warren out there saying, we need to recall the Federal Reserve Chair. She knows damn well. She's on the banking committee, for Christ's sake. She knows damn well you can't recall a Federal Reserve Chair. The only thing you can do is revoke the Federal Reserve's charter. That's it. That's their only move. So so what are you talking about, Liz? Oh, I know what you're doing. You're setting up for the 2024 election campaign to put the Fed on trial and make it a presidential issue. We can save your job. We can save your pension. We can do this. We can do that. The evil Federal Reserve is bankrupted you and all the rest of it. And that's the narrative. It's no different than only the U.S. empire is guilty in Ukraine narrative. That's also, you guys know, I feel that's just nothing but rotten nonsense. I don't disagree that the U.S. and British neocons are not driving this thing, but don't tell me that there's not German neocons also driving this thing off a cliff because of how they need to sell the collapse of the economy by blaming it on the Russian-Ukraine war. That's always been their plan. That narrative is starting, thankfully, because of the Fed, starting to fall apart. But now they're just shifting the bad guy from Vladimir Putin to Jerome Powell. That's where will
the Fed? I mean, that's the other big question. Then, I mean, will the Fed be able to hold the line in the face of what's going to be enormous political pressure over the next?
It comes down to I think it comes down to the debt ceiling fight in June. Yellen is doing everything, is signaling, just like Pelosi did in the summer 2021, that we're going to have a big fight over the debt ceiling. Because Yellen, the diehard ultra Keynesian, wants more stimulus. And you have to get Kevin McCarthy has been acting like, the second coming of Newt Gingrich in his first 6 months in office, right? Do I believe that? I don't know. But I can tell you this, Kevin McCarthy was their choice, Davos's choice, for House Speaker. But now, did he get the manila envelope treatment from Jamie Dimon? You work for us now? Seems like he has been. I don't know. If they cave on the debt ceiling, then a massive treasury issuance after the debt ceiling to pay for the existing budget line items and this war spending in Ukraine will actually transmit through and crush the regional banks. So McCarthy and the GOP really need to hold the line on spending and signal to the global markets that the U.S. is ready to get its fiscal house in order. If you see any kind of real pushback from the GOP over the budget, then I think what you wind up with is then you'll start to see capital shift again. And the Bank of Japan, once Ueda is in office for a couple of months, and if he shifts monetary policy, I think the last pillars of the final, Lagarde runs out of weapons. Lagarde as the metaphor for Europe. She runs out of weapons to maintain all of these very delicate interest rate structures that exist currently, and that those things can all just collapse. They could collapse very quickly. Now, the Fed also is not going to be 100% hawkish at all points in time, because that would also be destabilizing. So that's why they issued the press release the other day. Yes, we're doing currency swaps with other central banks because, but it's all to serve the dollar. It's not to serve the euro. It's not to serve Lagarde. It's, hey, we just stole we just destroyed $1 trillion worth of global, levered up capital. But, if you need a $450 million loan, that's fine. We'll sell it to you at market rates. That's all that says to me. That's what I saw the other day. So does the Fed have the ability to withstand this? Only if Congress gets its fiscal house in order, and only if we see the second phase of this, which is that a fundamental shift in political power in Washington. And what I've seen so far makes me believe that the New York boys are in control of things. And I also see enough things coming out of the Department of Defense to tell me that there are seriously powerful people who are trying to stop the war train as well. Yeah. And so I don't know they're going to win, but I know that they're trying to fight. And I think that's what we have to be open to. And a lot of people are very black-pilled about this and just want to go, oh, it's all a big club and we're not in it. I don't think so. I mean, that's not what I say. If I saw that, guys, that's what I would tell you, but I don't see it. And this is not me being a Pollyanna, planning to put on the rose-colored glasses or anything else. This is me literally giving up 90% of my quote-unquote first principles in order to cross the line and try and see things from the Fed's point of view. I hate the Fed. I hate central banks. I hate all these people. And I'm willing to make this argument because I think it's intellectually, emotionally, and individually correct, meaning the individually incentively correct. The incentives of the people who are in these positions, this is the correct read of them. And if I'm wrong, I'm wrong. And I'm happy to take comments, questions, and challenges on this. But you better have your ducks in a row, because I'm going to come at you with both barrels, because I'm not coming off this unless you really can prove to me otherwise. Somebody said to me the other day, think about Jerome Powell. He's 8th generation, American. He's directly descended from, the Virginia landowners who first settled Virginia. He's not of the same stock of Bernanke and Yellen and Greenspan and the other ones. He's not that guy. This guy is an American in a way, an old American in a way that is different culturally and familially. And if there is any kind of dynastic issues, within American culture, which is, compared to European culture is laughable. But if there are any vestiges of it, we have to be sensitive to that as well. And factor it in.
And at that point, Tom, with your invitation to people to ask you questions, so that you can come after them with your intellectual. Yeah, exactly. I'm gonna hand over to Alex and see if he's got any points, questions that he wants to place to you.
Thank you, guys.
Yeah, there's one question here which I want to start this off with Tom, and it's from Utis4321, because I was thinking the same thing, actually. Utis, taking your claims as true, why doesn't or didn't Europe side with Russia? Seems like they complement each other economically and would be an economic superpower. I was thinking the same thing, in that why would Germany allow itself to be deindustrialized?
Well, here's the thing. And this is and it is a hard thing to understand. If you allow the United States, look, the Russians don't want to be ruled by the Europeans either. That's the big one. And they've made it abundantly clear. They're moving towards the private production of capital and the private, and they want sovereignty. Europe doesn't want sovereignty. They want the Russians to be their commodity producers. And it's very clear. I've always said this, that there's no one ever went broke, in the words of P.T. Barnum, of underestimating the vulgarity of the American consumer. Well, nobody ever went broke underestimating the arrogance of European elites, old European money. Let's not kid ourselves. So there is a desire they understand that their system, that they want doesn't work unless everybody's on board with it. They are trying to force onto us a system that is only sustainable through force. The Russians refuse and have refused for the last 140 years to be ruled by Western Europe. This goes all the way back to when the Brits first went into Afghanistan. This is an old fight between European tribes. Okay. And so you're not going to get rid of that. And they've always thought that the best that they could use the Americans and their money and power within the American system to throw it bodily at the Russians and use that in order to then to do two things: weaken both of them, weaken Russia, you weaken China, and then they can then impose in a regulatory framework their vision of the future, which is what they continue to do. Okay. And if you look at the way they're acting, they keep making these grand diktats as to how everybody else needs to act relative to the European Union on climate change, on ESG, DEI, all of these quote unquote European values, which nobody else seems to share. So it makes sense that, yes, in a first order analysis that, yeah, and the United States is absolutely not going to allow Germany to side with Russia. This is, again, old British, American, Anglo-Saxon, Anglo-centric foreign policy says you cannot allow Germany and Russia to side with each other, because if they do, they will build an industrial and commodity powerhouse. I think it's a little out of date, personally, because all you did was shift the Russians over to the Chinese. And now you've got a situation that's even worse, because as opposed to mobilizing 85 million Germans, you're mobilizing 1.5 billion Chinese. Like it's immensely dumb, right? And even if, China goes through a massive demographic collapse over the next 20 years, we're still talking about 1.2 billion Chinese or 1 billion Chinese, whatever it is. Like, you understand what I mean? So I think that you've got to factor it in as to how they conceive of what their power base is. If they were offering the world something as for whatever it is, that if they were offering something for something, then yeah, that analysis about, hey, Russia, Germany, allow them to get together and everything will be fine. But they're always offering nothing for something. They always want to offer debt or some other form of feudalism for everybody else's commodities. That is the European colonialist mindset. Extract the wealth for ourselves and give them baubles in return. And that's the entire Great Reset when boiled down to its, with the central bank digital currencies and all of it, it's boiled down to its bare essence. It's no different. And so they hate, and by the way, they hate the Americans. Like, you're telling me that the British aristocracy doesn't hate the United States? Really? Huh. Like War of 1812, Civil War. I can go on. Like, all of American history is the British trying to take over the United States and having LIBOR as the whip hand over American monetary policy for the last 100 years, 90 years, has been the biggest whip of all. And that's over. And they're really angry about that, which is why they fought Powell being put on the Federal Reserve Board. It's why they fought John Williams at the New York Fed. And it's why Geithner and Obama fought SOFR for 10 years after the crisis. To be honest, the global financial crisis, to be honest with you. And when I think about this, the reason they were so angry about Donald Trump was because they knew Trump was going to be told by Wall Street to appoint Powell as Federal Reserve Chair and start the process of decoupling the United States from Europe. That's, in hindsight, what this is all about, because Hillary was going to turn everything over to the globalists. If anything, she would have helped create a banking crisis and then literally handed our banks to them. And Wall Street was like, no, because Wall Street was backing Donald Trump very surreptitiously during the campaign. And now we find out. And so in hindsight, we can now back up these last 6-7 years and figure out what was actually going on, because that was the real fight then. None of us saw it. I didn't see it. Nobody saw it. But people within Wall Street and within the Federal Reserve and in areas of the banking system in the United States, now that I've had a chance to, when I bring this stuff out and I talk about this stuff, these people come out of the woodwork and they talk to me about it. and I hear it, and they're like, "Yeah, dude, you're so freaking right about this." I'm like, "Oh, okay. Please tell me more. Like, I want to know why." And then I hear the stories, and I'm like, and half of them I can't tell because I mean, I can't because it's not right. But it's real. That I can tell you, it's real. So, the Hamptons is still powerful. This is what it is.
Electric Beaver wants to know, what does all this mean to us working class?
It means that keep your head down. Don't fight the trends. Okay. And certainly at this point, don't fight the Fed. Okay. Go with the trends that are in place. This is going to push us out of debt-based assets and into tangible assets. For us, it means that if the Fed wins, we will have a civilization that comes out the other side of this. That will have a strong enough foundation to come out of and rebuild with. If Davos wins, we're in Minority Report with more Germans for the next 60 years for our grandchildren to get us out of. Okay. So it's that big a deal. But if the Fed wins, even partially wins, in such a way that the United States has to wind up breaking up at the end of the decade, right? In order to preserve the vestiges of its commercial banking system and its legal system and its tax system and all of the things that make the United States a good thing, not its foreign policy, not the dollar hegemony, not all of that stuff, not the empire building, but the United States stripped of the empire. That part of it, that will be preserved if necessary, if the entire middle of the country from Idaho to Florida leaves and cleaves off the east and west coast, right? You'll get all of Western Canada all the way up to Alberta, Manitoba. They'll all leave Canada too, and you'll have a contiguous new United States from Alaska down to Key West, from Anchorage to Key West. I can easily see that. That may be one of those things we have to deal with. But if that happens in such a way that can preserve most of what the Fed has done here, then the world will probably survive in a way that is, reasonable. But it's clear that the end game here is that somebody is trying to get somebody else to fire nuclear weapons first in order to preserve their power. And there's nuclear brinksmanship is happening at the financial level as well. And it's not just nuclear financial weapons that are being set off. Those are already being set off. It's now whether or not the escalation is going to be to nuclear weapons. Well, that's what we hope doesn't happen. And this is why watching what we see out of the US DOD over Ukraine is very important, and who's actually in charge. And I don't know at this point. And I think it's very, very much up in the air. So for us as people, I can tell you, the name of the blog is Gold, Goats, and Guns for a reason, folks. It wasn't random. I don't know what else to tell you. Shore up your personal balance sheets. Eliminate counterparty risk where you can. Make as many local connections as possible. Strengthen your local economy. Strengthen your ability to withstand shock, and you become a node of stability for everybody else. And aggregate and curate around you a community of like-minded people, and then we'll rebuild, which is what we always do. On the other side of these things, it's going to be bad. There's no way around that. But the question is, how bad? Let's hope it's not Mad Max. I don't want Mad Max. No one wants it.
Ryan asks, what's the best way to protect our dollars? I'm moving abroad, Tbilisi, January 24. So want to make sure it's financially feasible.
The dollar is going to continue to strengthen for the next 18 months or so. If the European sovereign debt crisis happens, there's going to be a massive run into the dollar. Okay. If I'm right about that, which I think, I mean, I don't see how. I just, every time I talk to people who really know this stuff better than me, they're like, oh my God, yeah, you're right. It's shorting the euro. But you protect your dollars by putting them into assets that will preserve your wealth. And it's either, don't think of in this response at this moment in time, you're going to be doing well if you're in dollars. But then once the shift happens and the dollar gets too strong, then the capital is all going to fly out of the United States. But the initial rush is going to be a massive move into U.S. assets. And it's going to happen against the background of rising interest rates, which is going to be really weird. Okay. So it's going to mostly go, you're going to see the Dow benefit. You're going to see gold benefit. You're going to see commodities benefit. You're going to see U.S. real estate not collapse the way a lot of people are worried about, because it's like the hot money is going to flow in and people are just going to buy real estate. And yeah, we may see an attenuation in prices regionally and whatnot, but as certain markets collapse, you're going to see people moving into it. And, but I don't think we're going to blow a housing bubble. I think we already have a housing bubble in certain sectors of the U.S. economy. But for the average person, get real, get out of debt. And, and if you've got, you're on a fixed income later on, you're on a rising real estate and you're on a rising interest rate environment, that's not going to change anytime soon. So there's going to be money to be made, or at least if Powell, if we can, if the war in Ukraine, the funding for the war in Ukraine stops, well, I think Martin Armstrong's correct about this. Incipient inflation expectations will back off. And now the rising interest rate environment will also then crest and come down, and we'll be able to ride that out. And then you just, buy the peak of the interest rate curve. If the Fed gets to 7% and mortgage rates get to 11% or whatever they do, and you can get 10-year money at 7.5%, you buy it and you lock it in, and then wait for the Fed to buy you off 10 years later, which is they will do. Also, don't think for a moment that part of the way to get out of this is by remonetizing gold. Again, the East is going to remonetize gold. The West is going to have to do it as well. One of the things that I didn't get a chance to go into in the opening arguments is that the way we're going to rebuild confidence in the U.S. political and financial structure is to remonetize gold and throw it out on the yield curve. Do gold convertible bonds. As my friend Vince Lanchi put it the other day, we're going to go from wanting to buy TIPS to buying GIPS, gold inflation protected securities. And there's going to be a gold cover clause or a gold redemption clause built into future treasury issuance at some point in order to deal with the unfunded liabilities of Medicare, Social Security, and all the rest of it, the pension funds. And if we raise up to 7%, the commercial pension funds get stabilized. Then we can start working through all the other things. And by throwing gold down on the yield curve, like you want to see money flow into the United States? Soros wants to go to perpetual bonds, wants to default on all the debt in Europe. The opposite trade is to remonetize gold and put the wealth back in the hands of the people. That's the big one. And I think that's what's on the horizon. I think that's the end game. Remember, Judy Shelton, who was the architect intellectually of that idea, was the other person that Trump and Mnuchin and everybody were trying to get on the Federal Reserve Board in 2017. And Kamala Harris and John McCain fist bumped and high-fived after they blocked her nomination by a vote. Because she was the one who was talking 50, 100-year bonds, 5% gold cover clause, and we were going to have her on the Federal Reserve Board, fundamentally changing the way the Federal Reserve conceived of monetary policy. So,
all right, from Tyler Durden, is now the time to buy Chinese yuan if you can?
No. I think the yuan is going to do very, very well, but right now the Chinese have a property bubble they have to deal with. They've got a lot going on. The Chinese, in order to deal with COVID, this, that, and everything else, they're shutting down. I think the Chinese are going to allow the dollar to strengthen, and they're going to devalue the yuan, and they're going to print a whole lot of them in order to deal with certain things. So I would expect, if you're trying to hedge with dollars, I would not hedge dollar risk with yuan. That's not what I would do. Right now, the dollar is still king. It's not going to be, but for the next 3 to 5 years, the dollar is going to do very, very well, relatively speaking. It's all the other currencies that are in trouble. Unless politically we do something really dumb, like escalate beyond a point of no return in Ukraine, which then ties our hands fiscally and forces the Fed to do what they don't want to do, which is to end QT and have to lower interest rates quickly. I think the entire bond market is completely mispriced. I think that the Fed is not going to start cutting rates until 2025 at the earliest. If Powell gets his way, And the Eurodollar futures curve, the Fed funds futures curve, the SOFR futures curve are all mispriced. And if we ever learned anything in the last 6 weeks that those markets could be mispriced, go look at the historical data and you tell me what we saw. Because we just saw historic moves in them because everybody's like having mimetic collapses and going, oh my God, I live in a different world than I thought I lived in yesterday. Well, guess what? There's going to be a lot of those over the next 18 months to 2 years. And so those markets can easily be very mispriced. So it's dangerous to believe that they hold the key to any kind of predictive key to the future. And this is the failure. And personally, this is the failure of what I think is why I think Jeff Snyder is wrong. I think Jeff Snyder was right when the Fed was complicit in allowing the shadow banking system to balloon above the traditional domestic banking system. The Fed's not on that train anymore. And now you have to rethink, you have to recalculate and reconsider all of your fundamental precepts when you have a Fed that is not working to become the global bank of the world. And you have a Fed that's working to become the Bank of the United States, which is a different conception. And when, I think that's where we are. I don't think Powell has grand dreams of global domination. I think he realizes that he can't do it. So we might as well retrench. And this is the way you do it, step by step.
Okay, so there's a bunch of questions about the timeline for all of this. Electric Beaver asks within 5 years or longer. Alex K says, how soon will the big blow from this crisis occur? Basically a timeline question. What's your take, Tom?
Well, timing is really, really difficult. I don't mean not to dodge the question. I'd love to be able to give you a good answer on this, but let's just think through where we are, right? We're a year and a half out from the next presidential election. Everybody's lining up to, become the next president of the United States. Everybody's on Washington is positioning the parties for the big fight. The 2024 election is going to be fought bitterly, more bitterly than the 2020 or the 2016, because again, Davos has political control. They don't want to give it up. So everything imaginable will be done to prevent Donald Trump from winning. Soros and company will spend billions trying to game the Electoral College. But again, multiple spigots of offshore recycled domestic dollars sent offshore and recycled and levered up and recycled back in order to fund all this stuff have been turned off. And many of the players at the table who were the conduits for all of this stuff have been arrested or bankrupted. And so it's not the same landscape. This is why these things are so important. I don't know if it's enough yet. I have no idea. What I know is that that's clearly what's happening. So if the New York banks get their choice of president in 2024, the Great Reset is done, like dinner. It's probably already done anyway, because SOFR is already the law of the land. LIBOR will be deprecated, and then all of that's already in place. There's no way to stop that. Once the banking system shifts over, it's done, and now the world has to take their cues from the United States, as opposed to the United States taking their cues from the world. So there are a lot of moving parts. But the next 18 months are going to be the most critical. Let's watch the next few months in Ukraine. Let's watch what happens around the Bank of Japan and the end of LIBOR at the end of June. Let's watch to see how the next 2 or 3 months play themselves out. And that will give us an idea of what's going to happen next. But in a Bayesian statistics probability field of these things, because that's all you've got, right? Long term, I think there are forces trying to break the United States apart, the forces in the default. I think that there are forces in the United States trying to break the EU apart in order to force it into default. Who's going to win? Again, as Alex and I discussed earlier, I think the Fed wins because the Fed has the ammunition and has the backing of a far stronger financial system than Europe does. We'll see. Europe is banking on being able to default and come out of the default with a clean balance sheet, having stolen tens of trillions of dollars, and then think anybody's going to trust them again when there are other alternatives for them to put their money into. i.e. the Chinese, the Russian, the whole East, which is moving towards a gold-backed or gold-settled trading system with a lot less synthetic and crazy leverage. Because even the People's Bank of China is cracking down on a lot of this insane financialization within the Chinese property markets, and that is going to change. That's going to have to change. Also, by the way, don't believe for a minute that the Chinese Communist Party survives all this. So they may not survive this either. So, and if what happens then? It's a good question. But I don't have a good time for you. I wish I did.
Okay. Better on a Camel says the big Fintwit argument is whether the discount window and BTFP program are equivalent to QE, or if actually results in a stricter lending practice, i.e. QT. What is Tom's opinion?
QT, not QE. People want to take. People have spent way too much time ingesting doom porn at Zero Hedge, and I love Zero Hedge, and they've been very good to me, but they have lost the plot on this. Not everything in the world is backdoor QE. Not all spending or all. It's not all QE, folks. QE is a very specific kind of program, and we're not doing QE. They just are so invested in the idea that the Fed can't normalize rates that they scream QT, they scream QE and the zero bound at every turn. Why? Because Yellen programmed that button into them. Bernanke programmed that button into them. Greenspan programmed that button into them. And a lot of these people who are on FinTwit, who are under the age of 40, don't have any clue as to what the world looks like when the Greenspan put wasn't in place. They've never lived in a world without the Greenspan put. They don't know what it feels like. Okay, it's just like I've been saying for years, Alex. You know, you've heard me say this before, and I've talked to old timers. I haven't talked to old guys in the bond who've been trading bonds for 50 years, and they're like, "Yeah, you're right. There's nobody. Everybody who's ever traded a bear market in U.S. securities is either dead or retired, or approaching retirement. And the only reason they're approaching retirement is because they're workaholics and they're still working at 75 years old. So they don't remember trading the bond desk under Volcker. Most of them have never done so. You walk into Edward Jones, which is in the United States, is your bond. You want to buy a bond fund, you go to Edward Jones because that's what they sell. Okay, these guys the 35-year-old or 40-year-old behind the desk with the MBA has never traded a bond portfolio in a bear market. Okay, he never has, but he'll tell you with supreme confidence as to what you should do and why bonds are such a good buy. He has no idea how to trade what it looks like. In the same way that most guys and most Bitcoin maxis, by the way, have never traded in a world without the Greenspan put. Hell, Bitcoin was created as a response to the Greenspan put. But now it's going away. Again, doesn't mean that Bitcoin isn't great. It's awesome. But it has its limitations at this moment in time as an asset class. And if you can't accept that, it's like accepting the fact that maybe Putin isn't the savior of the universe, what we ran into a year ago when he first ran into troubles in Ukraine, right? And that maybe there's like problems within the Russian military but we couldn't say that either in this side of the aisle because everybody had emotionally invested in Putin is going to save us from the Western oligarch narrative, which was a narrative. And don't get me wrong, I like Putin. I think he's a good guy. I think he's good for Russia. I don't think he's a good guy. I think he's good for Russia. I think he's good for the world. But he's not without his faults. And the same thing with Bitcoin, same thing with gold, same thing with any of these assets. They all have their applicability at a particular moment in time. And sometimes, I hate to say it, guys, you want to root for King Dollar. Not because the dollar is good, but because the dollar is the best weapon to fight the guys who are actually trying to kill you. That's the hard part. And if you've never sat at a table, sit at a 12-handed, poker is always 12 guys fighting amongst themselves. There's never any negotiation at the poker table. Unless you're really talking about who's going to like try and take a piece off the guy with the big stack. Well, I clearly am not in the position. I'm going to let that guy do it. But if you play games that allow you to go, I have to make this really distasteful alliance with this guy that I hate, who just screwed me over 20 minutes ago, but I have to make an alliance with him now, otherwise I get taken out, then you do it. Geopolitics, and finance do not have allies. You have interests, and always keep your interests in mind. And this is the important point. So when the dollar is strong and I see the Fed doing things to screw the globalists, I'm on Team Fed. The minute the Fed turns on me again, I'm off Team Fed. I'm on Team Gold or Team Bitcoin or whatever. That's because I'm on Team Tom and I'm on Team Humanity. And I'm willing to side with whoever I need to survive. And I think that if we all do that, and we all are willing and open to do that, we'll find that our these intellectual discussions about these things become a lot less fraught with emotional rabbit holes where people get defensive and like, I don't care. I'm just on Team Tom. I'm on Team Humanity. I want humanity to win. I want a better decentralized world, and I'm willing to, in the short term, make a deal with the devil to get there. Hate to say it, I am. That's who I am. Because if you deny your shadow, if you deny the fact that bad guys can do good things for the wrong reasons, well, then continue watching Disney Plus, because there's plenty of those stories on there.
Lada Morao asks, do you think that BRICS will come with one common reserve currency, or rather use multiple national currencies, or switch to Bitcoins?
I think that the BRICS framework is what they're going to. I think is what I intimated earlier, is that they're going to wind up with a gold settlement system. They're going to do bilateral trade, and the problem in the past, like the Adam Smith model, the problem in the past is that when we were moving gold coins around, you had to move tons of gold around in order to deal with trade imbalances, and then gold would build up, and then the currency would rise. I think ultimately, with them being able to. Well, that's today being able to tokenize gold that way and tokenize gold reserves that way. Everybody can now keep a really good, simple balance of these things, and they can use that as a means by which to build trust amongst each other. And then they'll probably put gold on the blockchain, and then eventually they'll settle up. So I think it's a good question, but I don't think a single reserve currency is in the future.
All right. We will have to end the live stream there. We are at an hour and 32 minutes. Mm-hmm. Thank you very, very much, Tom, for this live stream. Wow. Lot of a
lot to think about, guys.
A lot of stuff
to think about.
And I was worried about the Ukraine.
We didn't even get into like 90% of it, guys. And I understand, but I thought that I really wanted to structure the talk today on these points, because I know that this is where I've been, my head's been. So this is what I wanted to brain dump onto you this morning. So
we'll answer the remaining questions on a dedicated Q&A, and Tom will shoot some of those questions your way as well if you want to.
Just send them to me. And when I get a chance, I'm really busy over the course of the next 10 or 12 days, but I will be happy to try and do that. And
some of the financial, because some of the questions, the financial questions are specifically
seriously, that's fair, and then
targeted.
It's completely fair. And don't be afraid, guys, to ask me questions on Twitter, as long as you're respectful. If you come in with the Bitcoin maxi attitude, I'm going to give you both barrels, and then I'm going to mute you because I don't have time for it.
And on that note, we have all of Tom's information: his Twitter, his blog. What else? Where else can people find you, Tom?
The podcast, Twitter, the blog, Patreon, and of course the Patreon.
Patreon.
How I pay the bills.
All of those links are in the description box down below, and I will have them as a pinned comment as well. The one and only Tom Luongo, thank you very, very much. Thank you to all our fantastic moderators: Valies, Peter, William Justice, Zarael, Reckless, Abandon, and who else am I missing? Somebody let me know in the chat. If Peter, did I mention Peter? I think I mentioned Peter. Thank you to everyone that's watching us on Rockfin, Odyssey, Rumble, YouTube, the Duran.locals.com, and Valies. Hello to Valies, moderating as well. Alexander, Tom, any final thoughts before we sign off?
I think we've heard an awful lot that we really do need to think about. A war of economic attrition fought, and we're all connected to it. Everything connects, because obviously what Tom says, the there's the geopolitical changes, and they intermesh with the financial ones, the ones in the financial world. And that really is very, very extraordinary. That is amazing. Very different crisis, it seems to me, from the 2008 crisis.
Very much. It really truly is. I do really, guys, I really do recommend everybody read Daniel DiMartino's book, Fed Up. You'll get an insight into how the Federal Reserve operated back then in a way that I didn't even understand. And I was listening to the second half of it the other day, and while I was in the car, and she's going through all that whole period of history from 2008 through 2012. And I was like, just floored. But it also became very obvious to me that mapping with 10 years worth of hindsight, who these people actually were and what they were actually doing. And they were doing, I think, these things out of malice and out of ideological blindness as opposed to incompetence. And I side on that, and I'm on that front. I know when incompetence when I see it, and I know when it's vandalism when I see it. I see vandals, and so for those of you who don't want to, who don't want to get down and who don't want to buy dollars right now so that you can buy more Bitcoins later, I'm really sorry. You should buy more dollars now, and you'll be able to buy more Bitcoins later. That's what I think. But you do your thing, or gold, or whatever. Same thing. So you guys be well. Thank you for the opportunity, guys, as always.
Thank you very much, Tom. Kat Stroper says Congress is addicted to deficit spending, essentially money printing and inflationary. Will Powell have the guts to stay the course even under immense political pressure? I'm going to send that question to you, Tom, but I think that's a good question to end this.
I might write an entire blog post around that.
Yeah, will Powell have the guts to stay the course? I think
it's the big question that everybody.
Yeah, I think that is the big question. All right, everybody, take care.
Be well. Bye-bye.